So I think it's very easy when you think about thematic investing to get distracted by the shiny new toy and to look at the disruptors who are going to create all the excitement and the change and everything else. But actually, many of the disruptor companies face huge challenges. They don't have the distribution networks that the bigger companies have. They don't have the pools of talent. They don't have the scale of balance sheet, revenues, experience, etc. And so there are huge challenges trying to take market share away from incumbents. And often when you think about thematic investing, one of the areas that is important not to miss is to look at the incumbents and see how they might decide to change their business. Because of the advantages they have, if they recognize the change and they look at the opportunity and see if they can build their business towards that change, then they can grow faster and they can really capture that opportunity in the market. And so I think what we tried to do at BlackRock when thinking about our portfolio construction is not just focus on the smaller companies and the emerging ones, but to look at the entire value chain that's going to be impacted. And you mentioned the electrified cars. Well, you could go and buy the obvious name that we've just talked about, or you could think about the companies that are selling the subcomponents to that group and how their businesses are evolving, and the companies that are selling the subcomponents to their suppliers, and see the entire value chain that's going through. And then to think broader about transportation as a service rather than just thinking about the electrification of vehicles.
Evy, I just want to, because you absolutely fascinating. We all want to get on this one as well. Valeo was one of those companies that I thought was going to just go great guns, and I really fascinated to speak to Jacques Aschenbroich, who's the CEO, and just extraordinary. And yet the shares have been tortuous to own, and they were exactly one of those companies you were talking about. Subcomponents, they provide product to the OEMs, and I guess a lot of tech companies as well. They were there on all kinds of wonderful technologies, and it's just not worked out from a shareholder point of view. Certainly not as of late as well. So the pitfalls are still there, aren't they, rather than just looking at the OEMs themselves?
Absolutely, and I think you've got to be very disciplined about how you do this. And one of the things that we've done in our portfolio construction is we've used these external suppliers of data, which has really been the transformation of thematic investing. If you think about the old days of investing geographically, you're going to go and buy a bunch of UK equities just because they're listed in London. What is that portfolio? What characteristics does it have? And it's going to change significantly through time. We've spoken in the past about the resources boom and the telecoms boom and stuff, and those were significant influences on your portfolio if you were just a UK investor. And I think if you're thinking about thematic investing, you're investing without the constraints of geography and without the constraints of sector. So you can actually build a portfolio using these building blocks to meet the needs that you think you're going to have through time. So if you think a certain theme is going to be more prevalent than others, and you're going to think a certain industry is going to benefit from a theme, and one's going to be disenfranchised as a result of that theme, then you can actually construct your portfolio that way. And I think that's really exciting, and it's only because of data that we can do that.
Are you constrained by looking at listed options here for the product as well? Because given the conversation we had before you came on set, and I know you were sitting in the room listening as well, and given everything we've said about de-equitization and the abundance of cheap capital globally as well, are investors who are constrained by only having an equity portfolio missing out on something really good here?
Yeah, I think it's very easy to get blown away by the headlines of these IPOs that you've been referring to and these valuations. And I think for every successful one, there are often many casualties. And if you were to go into the private market, you would be exposed to just probably quite a few misses as well as hits. I think it's the same in the public market. There are obviously lots of opportunities in both areas, and I think to have a portfolio that allows you to get a little bit of both would be the most flexible and best way to do it.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.